So, welcome back to the podcast, everyone. Today's guest is very special because she is the first one who is not part of our so-called network, right? Her name is Hitomi Yasuda. I hope I didn't mess it up. And she started in international sales, textiles and apparel, so the fashion industry. And in 2018, around 2019, she switched over to real estate. And I'm very happy to report that about 4.5 years ago, 2021, she was able to leave her W-2 and do this full time. However, she has noted that she is not an overnight success, and she self-describes as, the epitome of persistence, consistency, never quitting, being coachable, and taking action. All things that I love. But anyway, Hitomi, is there anything else that you want to add to that intro?
No, I'm just very grateful and thank you for inviting me to be part of your podcast.
Okay, well, definitely thank you for coming again. Right, so let's jump right into the questions. So first of all, what I always like to ask people is, so you were in the fashion industry, and then how did you first get into real estate? What inspired you, and what was the aha moment where like a light bulb went off in your head, and you decided to focus on multifamily specifically?
Well, for me, a lot of it was just life situations, right? I basically found myself in a very unhappy point in my life back in like 2018.
Mm-hmm.
Coming from an Asian family with very, very strict parents about education, I went down that rabbit hole of going to school, get good grades, and then work really, really hard for an employee, or
Yeah.
sorry, as an for an employer, right? My parents never really kind of gave me that encouragement or the thought of that I could own something someday. It was more
Mm-hmm.
about just grinding away and being a good employee, and that somehow that was going to give me this abundant life that I was seeking. But instead, what happened was just a lot of burnt out misery and a sense of insecurity about what's going to happen to my financial future.
Right.
Because back then, what I didn't really see was that I just had one stream of income, right? So if something, heaven forbid, happened to that my job with
Mm-hmm.
benefits, right? I'd be in really, really big trouble.
For sure.
And and I was trading time for money as well. So if I wanted to earn more money, it meant working more crazy hours. So it
Yep.
just got into this vicious hamster cycle, right? Where I just was just working all the time. And I had, you know, a very empty existence, relationships suffered. My health started to suffer, right? Everything about why we're on this planet to live just started suffering. I was just
Mm-hmm.
existing. So I basically hit rock bottom emotionally, and I'm like, man, I got to find something different. Like, this is ridiculous. So I
Yep.
started looking around at like what other successful people were doing. And there's many differences of success, right? Success means like financial, relationship, spiritual, right? In my case, I was looking for people that had a sense of balance,
Mm-hmm.
balance. And my life for sure was completely out of balance, right? So I started looking for people that I felt had balance, contentment, and all that sort of stuff. And talking to them, like how do they create this life for themselves? And one
Right.
of the things, or two of the things that I noticed was they had multiple streams of income
Mm-hmm.
and real estate. So I'm like, I got to get into this real estate game and like figure all this out. Like, what is happening here?
Right.
So that's kind of how it all began, was really learning what these other successful people were doing.
Okay, but then why multifamily, not like single family, not fixing and flipping, not doing something else? Why multifamily? Oh, was that something that you stumbled onto eventually?
Well, again, there's many different avenues within real estate, right? You
For
have
sure, for
the
sure.
single
Hmm.
family, the renting, the landlord, landlady duplex type of thing. There's the fix and flip. There's the wholesaling. There's like tax liens. There's all this kind of stuff. For me, what I knew what I wanted was I didn't want another job.
Okay.
I
Hmm.
wanted something that creates passive income, right? You know, Cash flowing assets is what I wanted. And so for me, although like the house flipping and all that stuff can be very lucrative, it looked like a job.
It,
You,
it
you
is.
find a project,
It is a
right?
job,
You
yeah.
flip it and then you're done. The money stops. And now you're hunting for the next one. So for me, that wasn't something that I wanted to pursue. Although
Fair
for other
enough.
people,
Hmm.
right, it can be very lucrative. So I didn't want that. I wanted something where, I could eventually take the foot off the gas pedal and the money would keep flowing, that sort of
Yep.
thing. Okay. And then I also looked at it from a perspective of risk, right? Because all of these businesses involve some form of risk,
Hmm.
and then also the ability to scale. So those are the two things I really looked at was risk and then scalability.
Okay.
And so again, before really diving into any one area, I started interviewing and talking to people that tried multiple different, venues, avenues within this space. And I kept hearing over and over and over, people that were successful in the single family space. They're like, man, if I could do it all over again, I would totally start with multifamily
Yeah, I've heard
because of
that.
the scalability,
Yep.
right? The scalability and then the reduction in risk. Not that it's risk-free, of course, nothing is risk-free, but like
Hmm.
on the single family side, right? You have a tenant that moves out, you are now 100% vacant,
Right.
you know? And then also your debt structure, right? The single family homes or the residential things that are like 5 units or less, right? A lot of it's recourse loans and
Hmm.
stuff like that versus on the commercial side, non-recourse
Non-recourse.
loans.
Yep.
Yeah. So just all these different things that I had to learn, though. A lot of these things I didn't even know about before, right? And I had these preconceived notions that you had to be rich to like get into multifamily. Like, how am
Hmm.
I gonna ever do this by myself? So there was a lot of learning, a lot of exploring that I had to do, and interviewing very successful, smart people who've done it before me to
Yep.
kind of learn what was the best avenue for me.
Okay. Okay. Well, it sounds like you surrounded yourself with the right people and you got in the right direction and you found success. So hats off to you. All right. So can you walk us through your first multifamily deal? And I want to hear the good, the bad, the ugly. Don't sugarcoat anything. Just tell me everything that you can about your first multifamily deal.
Sure. So fast forward to today, right? I've probably underwritten and looked at, over 1,600 deals. So one of the things is, really understanding how to evaluate numbers and the math and all this sort of stuff like that, right?
Hmm.
And it definitely wasn't pretty back in the early days. I started finding deals back in like 2019 and 2020. And the problem back then was I didn't understand underwriting to the extent that I do today. So
Okay.
evaluating deals took me forever. I got analysis paralysis and there was a lot of fear on
Hmm.
pulling the trigger and submitting offers and all this sort of stuff. So, like 2019 is a bit of a blur in terms of how much effort I put in and I had nothing to show for it,
Yeah.
right? Because of just that fear. But then in 2020, right, the year of COVID, before COVID even happened, right, early on in that year, I had two deals under contract. And what happened was then suddenly COVID happened, right, which was in March.
Hmm.
And basically both of those deals that I was under contract fell apart for different reasons, right? A lot of it was just due to naivete, but the first one fell apart because the seller had wanted to do some sort of like a 1031 exchange and then was looking to take his proceeds from me buying it
Hmm.
onto his next property. But when
Right.
COVID happened, that all fell apart, right? So then it made him basically say, hey, man, with everything that's going on in the world right now, let's have a gentleman's agreement to back out of this deal,
Hmm.
right? You don't sue me for non-performance and I won't sue you. I'll give your earnest money deposit back, but let's just walk away. So that
Yeah.
whole deal and all that effort kind of fell apart from extenuating circumstances, right?
Yeah.
Then that same year, there was another deal that I and a partner got under contract, 74 units. And that one, right, again, naivete, like a lot of these things you don't know until like you go through it, right? But
Hmm.
I asked certain questions that I was told to ask, things like, hey, what's your occupancy? And that seller said, oh, 100% full. And I'm like,
Hmm.
okay,
Uh,
and then, do you have any active lawsuits? Oh, no, touch wood,
hmm.
everything's fine. I've never been sued for anything. What I didn't realize though, right, was that just because a seller seems nice or a broker seems nice, doesn't mean that that's exactly what's really going on, right?
Right. Right. For
So
sure. Hmm.
what happened in this instance was turns out the seller was lying. They lied about the occupancy and they lied about the active lawsuit.
Hmm.
And we didn't find all this stuff out because of, again, naivete, not knowing how much to push to ask these kinds of things. We didn't find all this stuff out until after the earnest money went non-refundable,
Oh, goodness. Okay.
right? So, cut a long story short, we had to pull out of that deal. And then we lawyered up, and like 2 years later, we got the earnest money deposit back. But it wasn't worth the brain damage or the stress that it caused, even though we got the money back, right?
Yeah.
So, my point is, a lot of that happened because of naivete, being new, being emotional, right? Getting
Hmm.
emotionally attached to the deal and
Yeah.
all those kinds of things, right? But never make the same mistake twice going forward.
Okay, okay. Well, it sounds like, you've learned a lot and as at least you survived. Some people if they go through this kind of so-called like seminar, they'll just quit. They'll, be like, okay, this is not for me, I'm out. But you're still here today, so again, hats off to you. All right. So, how has, like let's talk about mindset first. How has your mindset shifted since like your first deal?
I think the big thing is I can do it.
Mm-hmm.
I can do it. It's possible, right? Before I had scarcity mindset. When am I going to find a deal? Where is the money going to come from? How
Mm-hmm.
am I going to find a sponsor, right? Like all this coming from a place of scarcity and
Yes.
lack,
Yeah.
you know? My mindset is really shifted now to where it's like one of abundance. There
Mm-hmm.
are more deals out there than any of us can handle, okay? But the point is through relationships, right? And really understanding the retail math,
Mm-hmm.
it can be done because you do it as a team.
Yep.
So for me, the mindset shift is one of abundance, you know,
Yes.
one of abundance.
Okay.
That
Okay,
that's the
great.
biggest thing.
Yep.
Yeah.
All right. I think that's definitely a positive and a very helpful mindset shift. What about your risk tolerance? Has that changed since the first deal?
Yeah, for sure. So again, you become a much better underwriter, right? As time goes on and
Hmm.
as you actually get into deals,
Yes.
you start to see what you had as pro forma, meaning your business plan, right? Like on paper, it all looks fantastic and looks achievable, beautiful.
Hmm.
But then your deals start to actualize, right?
Yes.
Your deals actually start to come to fruition, and then you start to see the delta between what you had projected versus how the business is actually performing. And then that's where you're like, oh no,
Hmm.
wait a minute, we were too aggressive, or we didn't have enough operating reserves, or things like that. Because the things that you start to learn is that everything does, in fact, cost more, take longer, and nothing goes as smoothly as you think. Because
Yeah.
in order to achieve these right business plans, it involves people.
Yes.
It's very difficult to control people, very difficult to find good people, you know. So if you don't have a team of good people, your staff and all that stuff, you have no business, right?
Yeah. Yeah.
So
Agreed.
it's difficult to execution is like critical, and it's difficult to do that exactly as everything is written on paper. So to
Hmm.
answer your question, I've become more conservative
Yes. Okay.
because also my risk tolerance, right? I'm not so like cavalier, like, yeah, let's just throw it in the back of the truck and go. You
Hmm.
know, now it's more about no, we gotta have it really mapped out, you know, year one, year two, year three, what we're thinking we're gonna do, instead of that attitude of let's just figure it out as we go.
Hmm.
Right? Because I think that's what happens with newer investors is you're impatient, right? You just want to just get in a deal, man. We'll just figure it out when we get there. And
Yeah.
it doesn't work like that. It
Yeah.
really
That's
doesn't. And
dangerous.
you know,
That is
it's
dangerous.
very dangerous. And as general partners, right, we have a massive fiduciary responsibility to our investors, to our
Hmm.
valued limited partners, because
Yes.
without them, the deal wouldn't even exist. We couldn't do it, you know?
Exactly.
So with that in mind, I'm always thinking about risk. I'm always thinking about the exit,
Hmm.
right? And I'm always stress testing my deals about what can go wrong. And like particularly in 2025, right, with all this talk about tariffs and this and that whatnot, right? We're being very cautious with deals that involve a very high value add component, or
Hmm.
there's a lot of renovations involved and things like that, because the risk there is cost of raw materials
Yeah. Can just balloon.
and supply chain issues,
Hmm.
right? And then also labor. So we're kind of nervous about deals that involved huge, heavy lifts, you know,
Yeah.
because our costs can go out of control very easily.
Okay. And then following up with that is like how about like your deal criteria? So is there like a minimum number of units you want to be involved in, or how has your deal criteria, changed after the first deal or the first few deals?
Right, for sure. So again, it's all about risk, right? And it's all about economies of scale. So in terms of deal criteria, it's just easier to like get loans and stuff, and then also economies of scale when things are, say, bigger than 85 units.
Hmm.
Because at that point, right, the deal has enough revenue and stuff like that that it can support payroll and
Yes.
stuff like that. So running the business, rather than something that's like 20 units. And here's the thing too, the effort that it takes to close the deal, right? Your loan docs, the due diligence, the this, the that, right? It takes just as much effort to close a 20 unit deal as it does, say, 100 units,
Hmm.
you know? And then there's just more revenue to be earned, more money to be made on these bigger deals for the same amount of effort.
Yeah. Yeah.
So even to like get the attention of a sponsor when you're new, right? You're going to need a sponsor to help you. A lot of sponsors don't want to work with these smaller projects because
Hmm.
of, again, not enough meat on the bones in terms of, right? The financial, what you call it, the money that you'll make for actually taking on that project to get it closed and stuff like that,
Right.
it
Yeah.
just gets really, really hard.
Yeah.
Especially if it's like in a brand new market and they have no footprint there, just kind
Hmm.
of start building a team from scratch, stuff like that. And then the other thing too is like what's happened with insurance and Mother Nature and all the natural disasters and stuff like that. So the criteria before, right, we're now very strict about, where it's located, if it's near a coast
Hmm.
and stuff like that. Also, capital raising, right? Capital raising is very, very difficult now compared to, say, 2, 3 years ago, right?
Hmm.
Investors are really holding back and being very cautious.
Yeah.
And some of that pertains to the age of the properties too. So really trying to avoid properties that are, older than, say, the 1980s and older. It's just
Hmm.
hard to garner the attention and the appetite of investors.
Okay.
So
Yeah.
absolutely, we've altered all of that stuff.
Yep. Okay. Hey, if you've got a real estate deal, a problem, or even just a question, we want to hear about it. Doesn't matter if it's big, small, complicated, ugly, or somewhere in between. If it's a good deal, we're absolutely interested. Period. And if you've got capital, you need to put to work in solid real estate opportunities. We've got those too. Either way, let's talk. Here's how this works. We always need more deals. We always need more capital. And we always find a way to make it happen. No games, no runaround. If we can't work together directly, we'll hand deliver you to someone who can. Well, let's move on to some tips and pitfalls. So what are your biggest lessons around, finding deals?
Broker relationships.
Mm-hmm.
Broker
And
relationships. A
okay,
lot of
and
our deals,
sorry, go
well, a
ahead.
lot of our
Yeah, sorry.
deals have been off market
Yeah.
because of broker relationships, you know? So that's been really key so that you're not wasting time looking at all kinds of different deals and having a very strict criteria, knowing when to say no and move
Mm-hmm.
on to the next one.
Okay, and then any extra advice about maybe how to develop those broker relationships, how to develop them, how to maintain them, how to get the brokers to send you the pocket listings, basically, versus someone
Right.
else. Uh-huh.
So number one is being very easy to work with
Mm-hmm.
and being responsive to brokers, right? Like never, ever, ever ghost a broker. If a
Mm-hmm.
broker actually sends you something, right, take the time to take a look at it. And if you're going to pass on that, tell them why. So they understand what your criterias are. But more importantly, thank them. And again, be respectful of their time. So I think being easy to work with and being responsive, all those kinds of things go a long way. Like I have this like really quick story to kind of emphasize what this means, especially when you're new, right? So this is
Mm-hmm.
like years and years and years ago. Um, I had a very respected mentor sponsor approach me and say, "Hey, I want to sponsor your first deal." So I was very honored. I'm like, "Wow." And what happened was, we talked about criteria, we talked about, what he's looking for and all this sort of stuff. And then I started going after the deal. Okay.
Mm-hmm.
And then we submitted, right? So I'll skip the other parts of the stuff, but we submitted the deal and I actually won that deal, even though we were third place in price.
Okay.
So that's another misnomer too amongst new people that you have to aim for the highest price. And if you're not getting close, you shouldn't even bother submitting. And I always teach my students, no, that you're just self-eliminated yourself by not even trying, right?
Mm-hmm.
You should be submitting on what makes sense to you and not being worrying too much about what other groups are doing, because who knows how they've underwritten it, what their assumptions are, right?
Right.
So anyway, I won the deal and I was third place. So it goes to show it's not highest price that necessarily wins deals. It's being able to demonstrate to the broker and to the seller a surety of close.
Yes, for sure. That's
That
super
is what they're
important.
looking
Yeah.
for. is a surety of close, right? So in this instance, I won the deal. So I went back to the broker and I was curious, how did I get chosen when you told me I'm third place?
Hmm.
And he said, oh, I can tell you. The first group, right, they're $1 million higher than like everybody else.
Yeah.
And I'm like, wow, why didn't the seller
Yeah. Why
choose
didn't
them? And
take
he
that
said, well,
one?
that's the
Uh-huh.
yeah, that's the problem. Nobody knew who they were. They
Hmm.
hadn't transacted with our company before, and their underwriting and their offer was so high above everybody else. We kind of felt like they came from like a weekend seminar. We
Hmm.
didn't trust their underwriting,
Yeah.
and therefore we didn't feel that they could actually close. So they kind of eliminated themselves by being so far off from where the rest of us were kind of clustered.
Yeah.
And I'm like, okay, well, what about group number two? And they said, well, they're about 300,000 more than you. I'm like, okay, still, it's better than mine. Why wasn't that one chosen? And he said, aha, because the seller was so irritated by that
Hmm.
group. I'm like, what do you mean?
uh,
They were rude, they were super demanding, they were making the seller jump through all kinds of hoops, and they kind of acted like you should be so you should be so like, and they were like entitled. You should be grateful that we're even looking at your deal,
yeah.
like attitude.
Yeah.
So the seller was like, oh my God, they're gonna like create nightmare for me over the next 90 days to try to get this thing closed. They'll probably even retrade me.
Yeah.
Just give it
Probably
to that
sounds like
young
it.
girl.
Yeah.
Yeah, he was like, so they were like, just give it to that young girl, right?
Yeah.
Like, yeah, we could tell she's new, but she's got an amazing sponsor with an amazing track record, right? They've already transacted before with that brokerage,
Hmm.
right, in another market. And you know what? She's easy to work with. She's very pleasant. She's very responsive. Give it to her.
Yeah.
And that's how I won that deal, even though I was like brand new,
Yeah.
right? So it goes to show the strength of your team, the strength of your sponsor, and being easy to work with. It's not necessarily highest price that wins. It's being able to demonstrate a surety of close.
Yeah.
So
Yeah.
that
I
was a big
definitely.
lesson that I took away from me when I
Yeah, I
first got
definitely
started.
think team is super, super important. And the sponsor is definitely going to be like, the head of the team, so to speak. Okay, so the next question then is how about, what are your biggest lessons around maybe operating and executing? So after you already have the deal locked up, you have it under contract, and then you close, and then you have to actually, perform your asset management and everything. What are your biggest lessons around that?
Biggest lessons is operating reserves.
Hmm.
You want to be very well capitalized for your deals because seriously, even though you can kind of predict where things can go wrong or things can break down and stuff like that, right? You never really know until actually you've been running the property for a few years. And like I said, things always cost more and take a lot longer.
Hmm.
And running out of money is the biggest stressor because then it prevents you from executing on your business plan, like say unit renovations or taking care of things around the property that might break down or damage, right? Because you can't keep claiming insurance every single time. Like,
Yeah.
no, you have to have that money set aside. And the kiss of death is tapping into cash flow to pay for projects, right?
Hmm. Hmm.
So being well capitalized for sure is going to help alleviate sleepless nights.
Okay. And
Oh, and
then
also, right,
go ahead.
having money to pay your staff really
Hmm.
well.
Hmm.
That's the thing, right? Without good people, then you're not going to be able to execute on your business plan. So you don't want to be, being stingy on that,
Hmm.
and being able to operate your business properly. So
Yeah.
having
Okay.
decent operating reserves, a cushion for sure.
Okay. And then, so different underwriters have different standards for the number of months of operating reserve. Some will just do 3, some will do 6. Do you do the same number for every deal, or just is it a case by case basis?
Yeah, I don't know how people come up with this like month thing. It really
Hmm.
depends on, again, the vintage of the property and how you're inheriting it, right? What is the condition of the property from the
Yeah.
current seller, right?
Hmm.
But also, what is your business plan? What is your vision of what you want to do with it? Each deal is very different. So, for example, on our most recent acquisition, this is a 1983 property in Tucson, Arizona, which just closed like 2 months ago.
Hmm.
The seller had injected $2 million because he's a developer, $2 million and already renovated all the units.
Yeah.
But then he was struggling with operating the property. And again, it wasn't his bread and butter. So he just wanted out of it to then go and do more other development projects rather than
Hmm.
operational projects. So
Right.
when we inherited the property, there's very little deferred maintenance, very little money we need to inject in order to manage the property. So on this particular deal, Do we have operating reserves? Absolutely. And do we have like some just in case money? Absolutely. But we don't have like $1 million type of thing that we would for, say, a similar property that's also 1983. Because
Hmm.
again, it's just different on how we inherited the property and what is our vision. So on this particular deal, right, we're not going to renovate the units. So we don't
Yeah.
need a CapEx budget for that.
Yeah.
Does that make sense?
Totally makes sense. Totally makes sense. Okay. So, and then I'm not so sure how much you can speak to this, but then what are your biggest lessons around, exiting deals? So either like refinancing or selling and moving on to something else. What are the lessons can you share here?
So I myself, I'm too early into the process. I haven't actually exited anything yet. So I'll just be
Hmm.
totally transparent about that. But
Yep.
have we actually are looking at refinance and things like that? Absolutely, you know. So those are the big lessons there is you cannot predict exactly what's going to happen to interest rates.
Yeah.
So how you underwrote it going in, right? This is where you really, really need to talk with the lenders and other experts, right, about where they think things are trending as it pertains to interest rates. But
Hmm.
more importantly, all the more reason why you need to partner with a sponsor that has gone full cycle
Yeah.
multiple times, right? Because they're the ones who've gone through the rocky roads and challenges and stuff and have successfully put their properties up for sale and know everything that's involved, that what that's going to look like. So although I myself have never gone full cycle yet, because a lot of
Hmm.
our properties, right, I'm in different stages. Some we just inherited, we just took over. Others we've been running along for like 2, 3 years,
Hmm.
right? They're very different. But the captain, the lead key principal, right, definitely has gone multiple times full cycle. So I've
Yeah.
learned from them what to be careful for.
Yeah. Okay. Okay. That's fine. And let's move on to the rapid fire round. So just I'm gonna throw some questions at you and just, don't think, just tell me the first thing that comes to your mind. So first of all, worst tenant story.
I would say skips,
Hmm.
right? The ones where they take advantage of maybe a concession, like a move-in special kind
Yeah.
of thing, right? And and we've done checks on them and everything. They seem to check out. They move in, right? And within a month or so or two, already start to fall delinquent,
Hmm.
and then find out they left in the middle of the night, and then they absolutely destroyed the place.
That sucks. Sorry. Yeah.
So destroyed the place. So they moved into a brand new renovated unit, only there for like 30 days, 60 days, whatever, and then they're just gone. And now we have even more expense, right? We've never collected the money from them, and they've damaged the place.
Yeah. I really wonder what makes people do that, but anyway, okay, let's down into the rabbit hole. How about your favorite expense saving hack?
Favorite expense saving from an operational standpoint?
From any perspective. So maybe from operations, definitely works. Hmm.
I think incorporating AI,
Hmm.
right? Systems.
Yeah.
Having systems in place where it enables you to track better, right? Track better, uh, revenue coming in or delinquencies, you know, from a capital raising perspective, right? Having a really good CRM and keeping track of all of your potential investors, how many
Hmm.
times you've talked to them, how many appointments, all that stuff, right? To just stay organized because the follow-up is the key. So I
Yeah.
think AI and systems is really the way to the future, right?
Okay. Yeah, I definitely agree with the systems aspect of that. Okay. And then, there's like a lot of advice floating around in the real estate world. Everyone has different opinions, but just for you, just from your perspective, what do you think is some of like the most overrated piece of real estate advice that you have heard?
Oh, if the deal is great, the investors will come.
Okay, I've heard this multiple times. Okay.
Yeah, no, it's relationships.
Hmm.
I don't care how good you think your deal is, right? It's relationships, it's trust.
Hmm.
I cannot emphasize that enough. So when people like say all that kind of stuff, I just feel like they're just saying it whatever and it doesn't really hold weight.
Okay. All right. And then conversely, what about like, advice that you think is underrated?
I think relationships with sponsors early, mentors early,
Hmm.
and then taking actions on the right things. That was my problem at the very, very beginning was I had crazy, crazy work ethic.
Hmm.
But if your effort is misguided on the wrong things, you're going to go nowhere fast.
Yeah.
So, here's the thing, people say this all the time, like relationships and stuff like, but then nobody ever really follows through,
Hmm.
nobody really, I should say nobody, many people, they wait to develop these relationships when you need somebody.
Yeah.
And it's too late by that point. You shouldn't go into it of like trying to meet people and talk to them because now you need somebody. You should be building these relationships coming from the angle of, well, how could I add value to you?
Hmm.
How can I help you, right? To someone that's like more experienced and stuff like that. So it also doesn't become a 911 because as you know, relationships, friendships, they take time,
Hmm.
right?
For
They
sure. For
take
sure.
time. And so I think although people keep saying this, I think a lot of people don't really, it doesn't really register until they actually need somebody. Now they're scrambling to try to make up for the 6 months where they should have been developing those relationships.
Yeah. Okay. That is definitely something that I agree with. Okay. And then what about, so you mentioned superpower earlier. Um, what do you think is like your unfair advantage with respect to, commercial real estate?
I think underwriting, I
Hmm.
really understand retail math. At the
Yep.
end of the day, right, what we're all trying to do is we're buying businesses.
Hmm.
And so we really have to have a really fundamental understanding of income coming in and expenses going out, and then being able to articulate that clearly and easily to, say, a potential investor.
Yes.
Because an investor, right, they need to make an informed decision. And if we cannot talk about the deal that we're representing, whether as a capital raiser or as a GP that we want to buy the deal, if we can't communicate that in a concise, easy manner to a limited partner, right, you're going to lose them. Because the
Hmm.
two questions that go through an investor's mind, right, number one is never, how much am I going to make?
Hmm.
Number one question in their mind, and it's human psychology, is how much could I potentially lose?
Hmm. Yeah,
Right?
people do
Our,
have a disposition to like negativity for some reason. It is just our
yeah,
nature. Uh-huh.
right. So as a GP or as a potential capital raiser, you need to be able to explain that to them, right? Like how has this business plan been put together, the strength of the team and all that stuff, so that we have the highest probability of success. Like you can't promise people, you can't guarantee people all this stuff, but you can at least appease their fears, right, of their hard-earned money that nothing, hopefully nothing bad is, going to happen, but at least mitigate the risk, right? So you
Hmm.
communicate that to them. Then the second question is, well, then how much can I potentially make? And then
Yep.
same thing, being able to explain that in such a way that it's believable, it's transparent, that they can understand. So for
Yep.
me, I think really understanding the retail math and really understanding the business plan and all that stuff, I'm able to communicate that to people so they can make an informed decision.
Okay. And then you coach that as well, right? So if people want to, get better at underwriting, you're someone that they can reach out to, correct?
Absolutely, yeah. And our whole goal, right, is I come across people where they've been trying to submit their first offer and it's been like 6 months, 9 months, a
Hmm.
year, and they're stuck, right?
Yep.
And a lot of that I think is because of misguided efforts, right? Number one is really understanding retail math so they
Hmm.
get out of that analysis paralysis and they can actually start moving forward. But the second thing is helping them, really taking a look at what exactly are they spending their time on? Because a lot of times people get false false sense of being productive, right?
Hmm.
Making
Hmm.
all these calls and shoveling papers around on their desk. But at the end of the day, what really matters is how many LOIs are you submitting?
Yep.
Because if you don't submit any offers, you're not in the
You're
game.
never gonna get in a deal, right? Yeah, for sure, for sure. Okay.
Right.
And then I don't like to use the word regret, but if you could go back and do things differently, what's one thing that you would do differently?
I would have started a long time ago. I read
For
Rich Dad
sure.
Poor Dad, Think and Grow Rich like years ago.
Uh-huh.
Years ago when I got out of grad school and I was like just starting my corporate career. But that expression, the teacher will appear when the student is ready.
Hmm.
When I read those books at the time, it was almost just like interesting entertainment. Like,
Yep.
wow, this sounds really cool. But then I went right back into just doing what was like familiar habit, right?
Yep.
Which is trying to climb that corporate ladder. I didn't understand that whole trading time for money system. And it wasn't until I was just miserable
Hmm.
that I finally started doing it. But look all those years that I lost.
Yeah. Well, I almost everyone that I speak to will say, number one, they wish they started earlier, or number two, they wish they started bigger, go bigger faster or start earlier. But whatever, I think it doesn't matter. that you didn't start that early, because in the end you still found success, and maybe if you didn't go through, these ups and downs, if you didn't hit that low point, you may not have actually, had the spark to get into real estate in the first place. So, whatever. You're here today, you're successful today, so good enough. And final question, maybe the final question is, what is your best advice for new investors? And by new investors here, I mean like, okay, not someone who wants to be active like on the GP side, but rather someone who is maybe looking into they want to invest in real estate passively. So they want to get involved as LPs or whatever else. What's your best advice for them?
I would say, um, take action, do it. Don't listen to the naysayers, and evaluate their own risk,
Hmm.
But I would say take action, right? Learn enough about the financials and stuff like that so you are able to make a critical decision about any deal that you're considering, right? Don't invest just because your brother said to do so or your neighbor said it's a good idea, right?
Hmm.
I think that's how a lot of people got into trouble in the past few years because someone told them so and they didn't take the time to do their own due diligence. So I do
Hmm.
highly encourage them, right? Is you do need to still do some checking, right? And
Yep.
if they don't know how to read the numbers, go to someone who can actually help evaluate the thing.
Yes.
But definitely, definitely, definitely take action for sure. So it's
Okay.
a form of diversification, right? It's a
Yep.
diversification of your various investments.
Okay. And then is there anything that I didn't ask, but you think, someone who's listening to this, they may have wished that I asked you, or anything that you wish that I asked?
I would say every single person that's listening, you can do this.
Hmm.
Right? You can actually create a different destiny for yourself. You're not stuck in your W-2. You're only stuck because you think you are, right? So for a lot of people, they don't make that change because they're afraid, or they feel like when I make more money or when this happens, then I'll get started. And I'll tell you right
Yeah.
now, there
Yeah,
is never, ever going to be the perfect time to get started.
for sure.
Just if you really want to get started, start in baby steps, part-time, whatever, but get started to kind of learn this new way of creating multiple streams of income.
Hmm.
Because I'm telling you, there is never a good time. Something will happen next month, and then the next month, and the next month, and all you're doing is just kind of postponing it. But I think for a lot of people, they have to just find it within themselves, right? How much they want to make change. And the
Yeah.
change only comes from us taking that action ourselves. But the good thing is there's plenty of people around here who are here to help you.
Hmm.
That's the thing. You don't have to do this by yourself. And I think that's where a lot of people get stuck is they think they have to do it all by themselves. And it's scary because change is scary. But there are people here, such as me, who are willing to help you,
Yeah.
right? Point you in the right direction.
Yeah. So I think perfection does not exist. So people who wait for, perfection, they're gonna just wait forever, wait until the next life maybe. Anyway, okay, so thank you very much for coming on the podcast. And then if anyone wants to reach out to you or is there any projects that you want to share, you can let me know about it right now, and then I'll just, include them in the podcast. But yeah, so how can people get in touch with you? I'll put that on the screen later on. But anything else you want to share before we wrap up for today?
Um, we are still finishing up a raise. There are some spots left on our latest uh, acquisition in Tucson, Arizona. It's 84 units. Um, it's approximately 95% occupied and 1983 vintage. And it's open to both 506C accredited investors,
And
but it's
506B.
also open to non-accredited crowdfund. And that's
Okay.
what's pretty phenomenal about this is that non-accredited investors can get involved for as little as $5,000 and earn while they learn, right?
Uh-huh.
On a real deal, So that's another way for people to actually kind of dip their toe in the water too and see, what strong operators do, what's it like to become an LP, right? If, investing is scary, they can just dip their toe and just kind of get started that way. So
Yeah. Okay,
I
sorry,
can
I
help.
lied. So now because you mentioned crowdfunding, which is something I only heard about once before, I have one more question. So maybe you can talk a little bit more about crowdfunding, how it works. And so like if the minimum investment is only 5,000, I think that's very attractive to a lot of people. So maybe can you speak a little bit more about this the crowdfunding aspect, please, if you don't mind?
Sure. So full disclosure, I'm not an SEC attorney or any of that kind of stuff like that. So any kind of very technical, very legal, those kind of questions, absolutely, people, I encourage you to go talk to an SEC attorney. But from an operator standpoint, right, why did we offer this type of offering to people is that it basically opens it up, right, for a much larger portion of the population to get involved in real estate. You
Yeah.
know, you have the typical 506B non-accredited, 506C accredited, right? Uh, raise. And but a lot of those deals, the minimums are like $50,000,
Yeah.
75,000 to 100, right?
Yeah.
There's a high barrier to entry for a lot of people, and they can't get in or don't want to get in because it's
Hmm.
scary or whatnot, right?
Maybe
The
too much of a
crowd fund,
commitment.
yeah, the crowd fund is very different, and we have a whole different set of attorneys that helped us draft up all the documents and stuff. But what the crowd fund does is it's a public offering.
Hmm.
People can be non-accredited.
Hmm.
And as operators, we could set the minimum to whatever we want it to be, right? So in this instance, we set the minimum to come in at 5,000,
Yeah.
and we still offer attractive, projected returns and things like that. So it enables a larger portion of the population who didn't feel comfortable or for whatever reason were disqualified from participating in a real estate deal, right? Through 506B, 506C because of the minimums were so high. Through the crowd fund, they can actually come in with a much lower minimum and still benefit from some attractive economics,
Yeah.
with their money. And because my team, right, we're very much about education, right? This is a great opportunity for people to come in and also really, really learn because here we are, we're live investors, we're GPs, but we also happen to be coaches.
Hmm.
So it's a great way where they can ask questions like this is how it happens, right? And kind of earn while they learn. So for a lot of the people who have joined us on this deal, these are some of them are people that are wanting to get into their own deals,
Hmm.
and they can see what they're experiencing through capital raising,
Yeah.
meaning right now they're on the receiving end. They're getting emails from me. They're getting invited to webinars from me. They're getting their questions answered, and they're going through the experience as if they were also raising capital on their own deal. They're like, now I see how you guys do stuff.
Yeah.
Wow, you guys have webinars. Wow, right? So they can see how capital raising actually happens right before their eyes. But at the same time, they can participate too, right? Because capital raising is daunting. If
Yeah.
you've never raised capital before, it is no
Tough.
joke,
It's
man.
tough.
Capital
Yeah.
raising, in my opinion, it's by far the hardest skill set. It's way
Hmm.
harder than trying to underwrite. Because capital raising, right? You have a fiduciary responsibility, right? You got to be able to talk about the deal. You got to be able to understand the numbers, and you have to guide investors through the whole process. And there's a lot
Right.
of touch points. It's not like you talk to somebody once and they're like, I'm in,
Hmm.
right? They go through a lot of thought process, questions, doubts, and then just the actual technical aspect of it, registering in the portal, filling in all the legal documents and money wiring and all that kind of stuff. There's a lot.
Yeah.
And so that's all part of investor relations. And then after it, right, after the deal is closed and everything, well, then there's definitely investor relations in terms of keeping the communication going with them, what's happening with their investment, the property, all that stuff. And so for a lot of people who've never even experienced being an LP, how do you expect to raise capital if you're not even an LP yourself?
Yeah.
Like you haven't even gone through it yourself. You know what I'm saying? So
Yes,
that's why
exactly. Uh-huh.
I tell people, get in as an LP, experience what you're going to go through. So now you're going to be that much more educated to then help lead your people on what to do, what's going to happen, and all that kind of stuff, right? Because
Hmm.
how could you teach people something that you've never even experienced yourself, right?
Exactly. Yeah. Okay, well, I
So,
think that's a brilliant idea, and that's something that I now want to look into further for myself. And I always tell people like in the single family space, I think the best way to get started is if you can is with house hacking, and in the multifamily space, I think the best way to get started if you can is by investing as an LP. But like the minimums of those LP deals sometimes are too steep for some people, and so I think this crowdfunding idea, I think it's brilliant, and I think it opens up the door to many other people to get in, on the LP side. And I think starting as an LP, starting with house hacking, these are the best ways to start, in my opinion, in the single family side and multifamily side. So the more people that can get into deals as LPs, I think the better. Anyway, okay, so sorry for the extra question and sorry to run over time a little bit, but I really appreciate you coming out here today to to talk to me, and I hope to have you back maybe like 6 months, 1 year later, because I kind of want to see people's progress over time, how they're doing. Maybe you've completely removed, you've totally took your foot off the gas, and then you're just relaxing on a beach somewhere. I don't know, but yeah, I would love to have you back. But thank you very much for your time today, and yeah, it's been a real pleasure. Thank you very much, Hitomi.
It's my honor. Thank you so much. Really enjoyed myself.